With Silicon Valley Bank collapsing, as well as potentially Credit Suisse as well, there is no better time than now to start speaking about ways you as an investor can survive in a stock market crash. Today, we're going to be talking about some tips and tricks in order to not only conserve your investment capital, but also to potentially make a bit of money along the way. Let's take a look. How's it going, guys? Ryan here and welcome back to another stock market investing video, and today we're talking about preservation in times of stock market crashes. As we know, there is a bit of turmoil in the market at the moment with a few banks going under. This has been kicked off by Silicon Valley Bank basically collapsing in the space of a few days, and as a result the knock-on effect that we are seeing, which has been pushed then onto the stock market due to a negative sentiment overall. I want to talk about some ways in which not only you can preserve your capital but also possibly make some money along the way as well. These are going to be generic tips that you can apply to the current situation that we're in and other crashes in the foreseeable future. Hopefully as well future-proofing your portfolio when other crashes do occur. So without further ado, let's get straight into it. First and foremost, tip number one, what you want to do is diversify your portfolio. And this doesn't just have to be in the stock market alone. We could be talking about diversifying into other asset classes as well, such as real estate, such as crypto, or simply just into different industries and different sectors within the stock market. The reason for doing this is because if you're invested with all your eggs in one basket in a certain sector or even just a certain stock, you are going to get hit really hard if that stock or those stocks in that industry are in a downwards trending pattern as a result of a market crash. What you'll tend to find is different industries and different sectors tend to perform in different ways. Some stocks will actually continue to go up when a stock market crash does occur. Others, and the vast majority, quite frankly, will go down, but go down in varying degrees. Also, diversifying into other asset classes such as real estate or crypto as well can have benefits, as those asset classes may not be hit as hard. For instance, we have seen a big crypto pump in the past few weeks, with Bitcoin itself even rising 20% because people are getting scared. Gold, another great example, this has been on the rise as well, with people fearing that there is going to be a market crash, and gold is traditionally the way to conserve your capital and keep your money safe when a market crash occurs. So diversifying yourself not only allows you to potentially make money in different areas, it also reduces the amount of money that you could potentially lose when it comes to a stock market crash. Coming in at tip number two, we have invest in defensive stocks. So what is a defensive stock? Well, basically it's a stock that tends to perform relatively well or is less impacted when we do have a market downturn. This really builds on point number one. So when I was talking about gold, for instance, gold stocks will tend to perform better because the price of gold increases, and as a result, people are going to want to buy more of it. Now, we can look at other defensive stocks such as utilities or such as consumer staples. These are things that people need and tend to stock up on when it comes to these turbulent times. So as a result, putting some of these defensive stocks in your portfolio, they don't have to be giant, but just mixing them in or swapping over to them when we do enter a stock market crash allows you to hopefully avoid that big hit and once again potentially make a bit more money. Tip number three, invest for the long term. If you're focusing on short-term investments in a downturn, what you're going to see is they fluctuate quite wildly and can drop quite significantly. If your investment strategy is to get in a stock then out of it in a short span of time, whether that be days, weeks or months, what you're likely going to see is you're going to get hit relatively hard. Now, if you're investing longer term, what you're going to notice is your overall portfolio is likely to remain relatively ineffective when we do end up getting a bit longer down the track, so 12, 24 months after the stock crash actually occurs. This is beneficial for a multitude of reasons. Obviously, A, you're preserving your capital, but also B, there are tax benefits when it comes to investing long term. On the ASX, if you're investing as an Australian resident, for instance, what you get is a 50% tax benefit, which means you only pay half the normal amount of tax if you've held a stock for over 12 months. So you need to take these things into consideration, as well as there are other ways to actually conserve your money and potentially even reduce your tax when it comes to investing in a downturn. Moving on to tip number 4, and it's quite simple and one you've probably heard many times before: buy low and sell high. What you find is that many stocks, as a result of a stock market crash, ultimately drop in value. Even stocks that operationally have not changed one bit. They're still making fantastic profits, they're still growing as a business, but their share price does not reflect that because the overall market sentiment is down. This is a great buying opportunity for you to get in low, and then when the stock market eventually recovers, sell those stocks for a big profit. This goes hand in hand with the long-term strategy as well. If you're able to pick up more stocks that you already, I suppose, own, so more shares in a stock, for instance, that you've held for 6 months at a cheaper price, not only do you enable yourself to grow your portfolio in the long term, but you're also able to average down in your buying price of that original stock. So hopefully what you're able to do is then make more profit out of the same stocks that you already hold. Coming in at tip number 5, keep some cash on hand. This is obviously so you can once again buy those stocks at a low, cheaper price when it does hit the bottom of the stock market crash, but also you're able to put that money into a high interest account, for example, and still continue to earn money safely when the stocks are dropping. And then when it gets to that point where the stock market looks like it's starting to level out and you want to jump in, buy some cheap stocks, you have the money already there. This is a fantastic strategy, as it means you can take advantage of the market at any point in time. Now, what you don't really want to do is probably take those losses and then wait. It could be risky because at any point in time, what you might see is a turnaround in the market. It's relatively hard to predict, and as a result, just having that cash reserve sitting there earning interest, whether it be in a bank account or a market fund or something else that's just earning you a little bit of stable money to then invest in stocks later on down the track, is a fantastic option for you. And this will help you in general for your overall stock market investing journey as well. Not only does it help you in these stock market crashes, it also helps you take advantage of opportune trades in your day-to-day investing life. Moving on to tip number 6, and it is do not panic sell. When you see your stocks dropping, and in some cases quite significantly, what you're often going to do is panic and then make an irrational decision to sell your stocks already at a loss. This is quite a risky strategy if you're investing in the long term and investing in companies which do have strong fundamentals, as they are likely going to rebound at some point in time. And with this, you want to make sure you are investing in companies that aren't too volatile or aren't too speculative when you are putting your money into a stock long term. Reason being, this means it can withstand a crash. You're not panic selling as a result because you're confident in the stock, you're confident in the fundamentals, and you are able to hold onto those stocks. Also, make sure you're not investing money which you cannot afford to lose. This is a big issue when it comes to new investors that just chuck their entire savings account into stocks. They are living basically with this big red figure, this big loss over their head, and they panic, they sell, the market rebounds, and they've just lost all that money, whereas they could have rebounded back to where they were, or potentially, even if they held on longer term, made a bit of profit out of it. Now, coming in lucky last at number 7, and possibly one of the most important things that you need to do as an investor, is keep your finger on the pulse. Keep yourself informed of what's going on in the market, what's going on with the specific stocks that you're invested in, so that you know exactly what to do when it comes to investing. If you don't have your finger on the pulse, basically you are driving blind. What you want to do is sign up to newsletters, get on platforms such as Twitter, get on forums, keep up to date with the latest news so you can understand exactly what is going on in the overall stock market and of course the global economy and your local economies as well. This will give you a better idea and broaden your perception when it comes to investing in stocks and what to do when it comes to your own personal investment strategy. This is absolutely the most important thing you should do in a stock market crash, but also, if not more importantly, to do throughout your entire investing career. These are skills that are going to benefit you in the long term. That wraps up today's video, guys. I'd love to hear your thoughts on what you would do as an investor to conserve your capital as well as potentially make a bit more money on the side in a market crash down in the comments section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.